Hello traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we'll explore how to combine the ADX and ATR indicators to create a structured trading strategy. You will learn how to measure trend strength, account for market volatility, and apply these insights to improve your trade entries and exits. Stay tuned until the end to understand every step of this practical and effective strategy. So without wasting any much of your time, let's get started. But first, let's explain what the ADX and the ATR indicator means. The average directional index ADX and average true range are two essential indicators that provide unique insights into the market. The ADX is designed to measure the strength of a trend, not its direction. Now this is the ADX. It ranges from 0 to 100 with values above 25 indicating a strong trend and values below 20, as you can see, this is 20, suggesting a weak or range bound market. I'm just going to make this line thicker. So this makes it particularly useful for identifying whether the market is trending or consolidating. However, it does not signal when to enter or exit a trade. It simply tells you if the trend is worth following. Now that's a very big point to note. Now for the ATR, it measures market volatility by calculating the average range between high and low prices over a specified period, typically 14, as you can see. Unlike the ADX, it's always 14. The length should always be 14, which is the default. Unlike the ADX, the ATR does not indicate trend direction but helps you understand how much price movement to expect. This is particularly useful for setting stop loss levels or determining position sizes. A higher ATR indicates greater volatility, while a lower ATR suggests quieter market conditions. By combining these two indicators, you can assess both the strength of a trend and the level of market volatility. This combination gives you a clearer picture of market conditions, helping you decide whether to trade and how to manage risk effectively. So let's talk about how to use the ADX and ATR strategy in the markets. So first of all, start by adding the ADX and ATR indicators to your chart, which I've already added to my chart. This is the 1 hour time frame on GBP USD. Use a 14 period settings for both, as this is the standard and works well across different time frames. The ADX will help you identify whether the market is trending, while the ATR will measure volatility to guide your risk management. So once the indicators are set up, look at the ADX value. If it is above 25, it signals a strong trend, just like I have explained. Next, check the positive DI, which is this green line. Green line here is the positive DI, while the red line is the negative DI. So this, if the positive DI is above the negative DI, it indicates a bullish trend, and if the negative DI is above the positive DI, it suggests a bearish trend. This step confirms the direction of the trend. So after confirming the trend strength and direction, use price action to pinpoint your entry. For a long trade, wait for a breakout above resistance in a bullish trend. For example, you can see, let's quickly move to the chart. We are bullish right here. We are bullish, clearly bullish, had this deep pullback. So we are looking to continue this bullish trend. We'll be having a series of market structure shift to the upside, as that is the typical for bullish trends. And then we have this breakout. Also, we have another breakout here, and it's expected that the trend should continue in that direction. So we should be looking for other blocks, FVGs, and potential PDI raising, which we can use to continue this bullish trend all the way to the upside. Now looking at our ADX, remember the first step is looking at the price action. Use price action to pinpoint your entry. Now we have confirmed that we are in a bullish trend using our price action. Also, we can see here we can see here that the positive DI is above the negative DI, and also the ADX is above the 25 level, as we can see here. So this is a strong bullish trend, and we are indeed in a bullish trend because the positive DI is above the negative DI. So we should be looking to just place a buy entry based on price action. If we're looking to buy from here, quickly remove this volume indicator. If we're to buy from here, we could just take our buy entry from this other block seated right here. Just take our buy entries from here, and now here is where the ATR comes in. To calculate your stop loss and your take profit, we are going to be using the ATR. Now remember, we are taking our buy entries from this other block. Exactly. We can also use for the fact that this was a major resistance that got invalidated, so this zone is a zone to buy from, and that's exactly where we are buying from. We're buying from the 50% of this zone actually, but I prefer to just use this other block right here. So looking at this, we can see we are left with adjusting our stop loss and our take profit levels, and this is where the ATR comes in. Now you calculate your stop loss using ATR, multiply the current ATR value by 1.5 or 2 depending on your risk tolerance, and place your stop loss that distance away from your entry point. This ensures you account for market volatility without placing your stop loss too close. For take profit levels, you can use multiples of the ATR value such as 2x or 3x ATR, or try your stop loss dynamically as the trade moves in your favor. So let's quickly apply that to our chart. You can see here where we're placing our buy entry, we have our buy entry here, and to calculate our stop loss, we should just trace where we are entering all the way to our ATR, the current ATR at the time, which is around here, and that is 0.00219. As we can see here, we have our ATR at 0.00219. okay, just gonna add a line there, to indicate. So you can see we have our ATR at 0.00219. now for us to calculate our stop loss, we should multiply the current ATR, which is 0.00219, and we'll multiply that value by 1.5 or 2. In this case, I'll be using 1.5, and the value is 0.003285. And looking at setting our stop loss, we will be looking at this value here. There's a value here. See stop, you see this stop where we have this stop 0.00637. no, we'll adjust this 0.00637 to value, which is 0.003285. so this is setting our stop loss 0.00328. all right, we are 324, just very close. Okay, let's just keep that 324. so this is our stop loss, and to calculate for our take profit, remember, just multiply the current ATR in multiples. It could be 2x ATR or 3x ATR. So I'll go with the 3x ATR, so it's going to be 0.00219 times the I'll be using 3x ATR times 3, which is 0.00657, and calculating that, we are going to have 0.00655 right there. So this is a 1:1.95 risk to reward ratio, and in and out, that's how I would have been able to take this trade using the ADX and the ATR. So this is how you can use this strategy to take your trades in the forex market, and it also works in the stock market. So if you're a day trader, ensure you use this strategy. Okay, let's look for another example before we call it a close for today. Looking for another good example. Okay, here is one. We are we are bullish right here. As you can see, we are bullish. See price dropping all the way down, giving us the push to the upside, and we should be expecting buy trades from here, from this area. Should be expecting buy trades from this push to the upside. So price is just giving us break of structure, breaks to the upside, breaks to the upside, and at the same time you can see the ADX is just ranging above the 25 level. Also the positive DI is above the negative DI here, so we'll be looking to just take a buy trade around here. Now looking at this, we have this zone which was violated. Remember, the first step is to look at price action first. Have this zone which was violated here. I'm just going to reduce the opacity of this for us to see the zone clearly. Now this was a major supply zone, but it was violated, so supply turned to demand, just like resistance turned support, and we have price using this as a major zone to take buy trades from. So if we'll be taking our buy trade from here, remember we have checked our ADX, we've checked our positive DI and our negative DI. So the next step is calculating our stop loss and take profit levels using the ATR. Now looking at this, the present ATR, the current ATR at the same time was 0.00240. Just gonna carry our lines to that area. 0.00240 is the current ATR at the time we are entering our buy trade here. Remember, it's vice versa for bearish trades also. I just happen to see more of buy trade examples. So to calculate our stop loss and our take profit, I'm just going to multiply 0.00240 times 1.5 for our stop loss, and I'm having 0.0036. So I'm going to adjust this to 0.0036. Okay, 36. Always make sure that the values are corresponding and are correct. Just going to increase this to enable me adjust this properly. Okay, we have it at 36 right now. Then for our take profit, as you can see, this gives our trade enough room to breach in case it wants to go against us. Then for our take profit level is just 0.00240 times 3. I like to use the 3x ATR, and this is going to give us 0.0072. So I'm just gonna adjust it to 72, and that is that for that. Alright, here we have it, 1:1.97 risk to reward ratio, and that's how you can use the ADX and the ATR for your trades. It's very easy. One common mistake to avoid is relying solely on the ADX or ATR without considering other indicators or price action. Remember, price action is the first step. While ADX measures trend strength and ATR gauges volatility, neither provides a complete picture on its own. Combining them with tools like moving averages or RSI, or doing your price action analysis, market structure, is essential, and it can help reduce the risk of entering trades based on false readings. Another error is misinterpreting the ADX values. For instance, some traders assume that a falling ADX line means a trend reversal, but this is only true if the ADX drops below 25. For example, you can see the ADX here was just ranging up and down, but it was above the 25 level. So yes, this bullish trend was still a strong trend, and as you can see, we are able to take trades off of it. If the line is still reading above 25, it simply indicates weakening trend strength, not necessarily a reversal. So entering trades during periods of low ADX values is another pitfall. When ADX is below 25, the market is often range bound and lacks clear direction. So you should wait, before taking your trades. Do not take trades when the ADX is below 25. Like we have here the ADX below 25, and also we have here in price a ranging market. So that is that. Alright traders, you've come to the end of the video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.